Okay, good morning everyone. Welcome to today's panel discussion on the considerations for exploration, development and operations of a critical minerals project in Australia. I'm Ryan Henderson, Director of WAVE International, and we've got an illustrious panel here today. We've got Nick Martin from Blackbird, we've got Dale Henderson, COO of Pilbara Minerals, and Chris Yeats from Geological Survey of New South Wales. So welcome everybody. It's a pretty tight little session, these. We've only got 20 minutes, so we might dive right into it. And starting at the start, might throw over to yourself, Chris, and on the exploration side of things, if you could give us a bit of an overview of the role that Geosciences New South Wales is playing in facilitating the exploration efforts at the moment, particularly in the critical mineral space.
Yeah, so like all geological surveys across the country, the Geological Survey of New South Wales has a fundamental role in actually being the custodian of the state's geological and resource knowledge, and also in providing pre-competitive geoscience data in support of mineral exploration. And that involves geological mapping, it involves geophysical acquisition, it involves also mineral potential mapping in our case as well. We do quite a lot of that work as well. We also directly support mineral exploration in the state through our cooperative drilling program, where we co-invest in drilling programs across the state. The most recent third round of that, we dispersed $2.2 million in grants to 22 different projects across the state. Now, being New South Wales, and I guess as many people on this call will be aware, there's been a bit of a mini rush around copper gold porphyries in the centre of the state. A lot of those projects were copper gold projects, but we also funded some PGE projects, a copper cobalt project in New England, and also an antimony project in New England as well, which is one of the lesser known critical metals. In terms of our focus on critical metals, that's a space that I think all geological surveys across Australia and also Geoscience Australia are starting to move more into. We're recognising the opportunity, we're recognising the world's changing in terms of its demand for different commodities and the growing number of commodities that are being looked for. We have a high-tech metals map of New South Wales that we released about 12 months ago, which sort of outlines the potential of the state and also some of the major potential projects in the state for critical metals, whether they be scandium, cobalt, nickel, copper, cobalt, as I said earlier, PGEs, those sorts of things. And we also earlier this year, in conjunction with PDAC, which was probably the last face-to-face conference anyone got to go to in the minerals industry in 2020, we launched a Future of Minerals report, which really outlined that changing face of commodity demand across the globe and what New South Wales offers. So in terms of New South Wales prospectivity, we don't have any lithium, so I'm not going to talk about lithium. We do have a lot of prospectivity for cobalt, and also some other metals like PGEs, scandium, and rare earth elements, of course, with the Diazoconia project.
Definitely. New South Wales has got a pretty interesting mix of things in the ground. So moving on from there, I guess exploration is one piece of the puzzle, but most people want to see things develop. So we might tip over to Dale, who's been involved with Pilbara Minerals, who are one of the most recent developments of a critical minerals project in WA, their Pilgrim project. So Dale, wondering about any sort of learnings you can offer about your development phase of the project, and particularly around how things progress through the DFS and through to execution, and how you guys have learned in ending up where you are today.
Sure, excellent. Thanks, Ryan, and good morning, everyone. In terms of development for Pilbara Minerals, as Ryan mentioned, we're one of those miners who have sort of successfully got through the design, build, commissioning, and now into an operations phase. The lessons learned for development, you'd have to characterise as the same for any other minerals project. When I reflect on the journey Pilbara's had this last 2 years in this space, there'd probably be sort of three key learnings, being the team, the mineralogy and processing, and lastly, what I'd call response to change. So starting with the team, as cliche as it is all about the team. And when it comes to development, it's highly critical that you're setting that group up for success, and that extends to the designers, the contractors, and the various operators you bring into the fray. When you get that wrong, it can go horribly. And there's other projects out there who who do have a misstep in that regard, but being conscious and careful about setting your team up for success is absolutely critical. And that kind of links to the last point I'll move to in a bit about response to change. Before I go there, mineralogy and processing, it's all about test work, and it starts with the ore body. It is as simple as it is. The ore body is the highest priority. It's not going to change. It was there first, and you've got to understand it really, really well and satisfy yourself that the processing test work absolutely aligns. In the case of Pilbara Minerals, they took a very disciplined approach in this regard. They put the right money in. They did plenty of drill holes, plenty of test work, pilot scale test work, the lot. And that really ensured that the process design was in good order. But all that being said, there was still tons of learnings to flow as the operation came into life, lots of optimization. Yes, and I'd have to say there's still more learnings to go without question. Lastly, in terms of response to change, being the other key learning, all projects change. It's the one guarantee you can get with any project. Things are going to change, things are going to move, and it's going to be thrust upon the development team. In the case of Pilbara Minerals, there were 3 cyclones during the build. There was various scope changes, typical build project where there was a peak in manpower required to get the project delivered. That translated to camp expansions. At one point, the build population was spread over 8 different locations, which was a nightmare, but it's all water under the bridge now. But what gets you through that is having a muscle and a machinery around the team and the contractors which can preempt these challenges, respond to them quickly. Absolutely vital for development. So lastly, to finish, DFS versus development. Look, DFS, it's got a bias for optimism. I think that's the best way to characterize it. It needs to be that way for financing, and frankly, most people expect it to be a bit on the generous side. Typically it's DFS will say it's lower cost, higher margin, and will get done sooner. In reality, it's the reverse of all of those things. And I think that's okay, because once you're over that financing hurdle, obviously you're bringing an operation into life, and there's no easy way to move through a development process. All you can do is, of course, focus on some of those things I mentioned around the team, the mineralogy and processing, and response to change.
Really interesting. Really interesting stuff. And I think the last few comments you made there are probably a pretty nice segue into throwing across to Nick here. For someone like Blackbird who's involved in the finance space, I guess you guys tend to get involved more at the DFS phase rather than earlier. So I mean, some of those comments that Dale just made about the perhaps ambitious nature of some DFSs is interesting. So if you can offer some thoughts, mate, on some of those points that Dale raised, perhaps, and maybe some of the specific things that you see having recently or currently got experience in the critical minerals space that people are perhaps, or that are perhaps a unique focus for critical minerals as you're going through a DFS and into a financing phase.
Yeah, thanks, and good morning, everyone. I agree with many of the comments Dale makes, and particularly around the team. The conversion rate of DFSs into finance mines is actually pretty low. We looked at the junior sector, not the producers, so those looking to develop a second or third mine, but the juniors looking to develop their first mine. Since 2016, we've sort of identified 105 and tracked 105 DFSs, and only 17, or about 1 in 6 of those, actually converts to a fully funded mine. And unfortunately, only about 2 of those actually has a share price today that's greater than what it was when they released the feasibility study. So you can see why investors, and whether it be debt investors or equity investors, are fairly skeptical and are looking for that optimism that Dale referred to in the feasibility study. And when you actually look at the market reaction, the valuations that they're getting are still pretty low, and most of the average trading is about 76% discount to NPV. So it's a pretty massive discount. And it takes about 12 to 24 months to actually go from a DFS to get through that financing phase. So many of the points that Dale picked up are absolutely true in that. And what we see is that often the scope inside a feasibility study is just too narrow. It does focus quite rightly on the technical aspects, but there's a lot more to it. And particularly for critical minerals, the sales and marketing aspects, environmental aspects, the ramp up aspects really need to be looked at, because they can have a big claim on a project's MPV, and they can have a big shaping factor on the way the project's developed. So until you get those aspects fully resolved, then it becomes difficult for the finance market to get in. Specifically for critical minerals, there's a couple of things I think people should always look out for, and what we tell people is the sales and marketing is really important for critical minerals. It's not a commodity; it's often customer-driven products, and critical minerals is a broad church, and there's lots of different industry structures, etc. But the basic thing is, and it sounds a bit silly, but you've got to produce a product that people want to buy. And not all feasibility studies actually achieve that. And often we see people have to go back and redo their work and maybe tinker with their flow sheet to actually generate that sort of outcome. You've got to have a good relationship and understanding with your off-takers. And I think we've seen with COVID, and perhaps this is on Dale's point about being flexible, is that those who actually generate good relationships, have a good understanding of where they sit, good terms and conditions, they can actually go back when things go a little pear-shaped and have good discussions and move their way out of that in a solid basis. If you don't, then you're going to strike real trouble. The other thing is just on financing. These aren't gold projects. There's different liquidity and different expectations from financiers, equity financiers and debt financiers. And that goes right across from capital structure, ramp ups, DD processes and all that sort of stuff. So you've got to engage early with your financiers to make sure that you're getting the right people on board from that perspective.
Yeah, and there's just on the financing side, I mean, there has been some interesting news flow in the sort of last couple of weeks in this space. I guess we've seen a project that Nick, you and I are both involved in, TMT over in the West, puts an announcement out just recently about some ECA funding strategies that they're working on. And we've seen Infinity Lithium over in Europe, in Spain, sort of tapping into some European sort of clean energy funding type of things. So it is very different to what you do see, as you just said, in the gold space, for example, or some of the other more known metals. So we are certainly seeing a very big difference in those approaches to finances in the critical mineral space from our point of view. So look, yeah, thanks for that. That's all pretty interesting stuff. Just thinking about now a topic that is pretty important at the moment, which we might skip on to, is looking downstream. And this is a pretty interesting consideration for Australia, particularly. In sort of sticking to the theme of this chat room, traditionally Australia's had a bit of a dig and ship kind of mentality, but we are starting to see a trend towards downstream, and particularly in this critical mineral space. So with the bit of time we've got left, I think that would be really interesting to get people's views on. Chris, I know you're more in the ground than perhaps the other fellas in the room here, but from your point of view, do you guys consider at all what it might be that comes out of the ground and what the products might be in your field of view?
Yeah, so I mean, obviously the Geological Survey, as I said, is at the pre-competitive data end of the chain, but more broadly, all governments, I think, across Australia understand the importance of the ability to try to value add and not just become a quarry for the rest of the globe. Governments are looking to maximise the return on the value return to the state and to the people of the state, and obviously, if you're manufacturing and producing products that are in global demand, then you've got the employment benefits that flow from that. Certainly, there's a bunch of strategies around it at a federal and a state level across the country to try to promote those sorts of things. The Commonwealth set up its Critical Minerals Facilitation Office to try to draw all that stuff together and coordinate it a little bit better. The Western Australians have got their Battery Metals Initiative, which is getting a fair bit of traction. And here in New South Wales, we've got special activation precincts, which are regional-based sort of hubs for industry activity. And one of the ones that's just been announced quite recently is one out in Parkes, and that's in the central west of the state, and it's very proximal to things like the Dubbo Zirconia project, the Sunrise Cobalt Nickel Scandium project, Owendale, Ningham, those sorts of things. There's a real opportunity there to sort of make that precinct a critical minerals hub, if you like, across the state. I think the other thing we also need to think about is increasingly investors are looking at ESG, at environmental, social and governance issues when they're investing. And Australia's got a really strong competitive advantage in that space compared to some of the other producers of minerals across the globe, in that we do have a good reputation, broadly speaking, internationally in that aspect, and we've got an opportunity here to position ourselves as an ethical supplier to the globe for these both traditional commodities like copper, gold, lead, zinc, but also these new emerging metals. And one of the flagship projects, I guess, in New South Wales, the W project, which is a rare earth elements project, and is a very, very large undeveloped resource. They're working really closely with offshore investors in order to develop products that are suitable for market. And we're very keen in government to see that progress.
Yeah, thanks for that. So Dale, just flipping over to yourself, as long as I've known Pilbara Minerals, which is, going back many years to your PFS phase, there was always a desire from the company to have some engagement with the downstream market commercially. And for a company that could quite easily be very merrily just producing a spodumene concentrate and returning value to its shareholders that way. Can you offer any comments as to why, from such an early stage as an Australian miner, you guys had a focus on that engagement in the downstream marketplace?
Yeah, sure. Thanks, Ryan. And look, I think Nick kind of touched on this point earlier around the nature of critical minerals being really needing to produce a product that your customer wants. Well, in the case of lithium, the spodumene is very much an intermediary product. The product which matters is either lithium hydroxide or lithium carbonate. And what happens between the ore body and that lithium hydroxide or lithium carbonate salt is that's the key. It's all together. And you do some mineral processing on site, and you do some chemical conversion through a chemical converter. So the optimization really straddles both those pieces, and the mineral variation that you see in the ore body, which then obviously concentrates through to the spodumene product, is ultimately still contended with in the chemical converter. So when we think about the journey of delivering the highest quality lithium hydroxide product, it's all about that integration with the customer, and it just makes lots of sense to integrate in that regard. At the lightest level, it's through long-term offtake, and at the most sort of heavy end, it's through outright commercial integration and ownership. So Pilbara's pursued that as a strategic objective from the outset, and pleased to say things are progressing really well with POSCO in that regard. But I'd also point to other examples within the industry, Tianqi most notably. More and more Kidman, more and more you're seeing this sort of co-joint integration, and it's a necessity based on the challenge of producing lowest cost hydroxide products, lithium hydroxide, lithium carbonate. So that's really it in a nutshell. Yeah,
great. And just we've got about 2 minutes left, or just under 2 minutes, I think. So Nick, from your point of view, from an engineering and from a supply chain efficiency point of view, what Dale said makes a huge amount of sense, and also what Chris has said. But it's from a financing point of view, can you offer any thoughts on the dreams of Australian juniors going downstream and what the opportunities and challenges might be there?
Yeah, there's no doubt there's lots of opportunity, and I think just listening to Dale is that I think there's those who are in production already got a mine up and running, an established product that's going to market. There's lots of opportunity to go downstream and do that in a variety of ways, and you can see that happening, and you can see finance markets sort of being attracted to that. For the juniors, I think it's going to be a lot more problematic. And some of the issues that for juniors they've got to consider is just the skill sets that they have. Starting up a mine plus a portion of downstream processing is a big ask, and there's lots of variety of skill sets required for that. So you really got to understand what sort of management team and structure that you start off from day one. The other thing is that you've got to have a much deeper and even deeper understanding of the value chain that goes all the way through that. So you've got to really understand, make sure that you know those end markets, make sure that you know where you sit inside that market, and that you're actually trying to exploit a competitive advantage that you can keep over a long period of time. the flow on is as well that from a financing perspective, the capex also gets very big very quickly. And so for juniors to raise a lot of cash just increases risk from that perspective. And so you've got to be able to be cognizant of what the market is willing to accept. And another one that we're seeing is that by going downstream, you can also have large working capital buildups in your business. And so you might have different stock in trade that has a big impact on your peak negative draw and your working capital requirements in the financing structure. So lots of opportunities, but I think it's for juniors, they've really got to put a lot of homework into their projects.
Yeah, you're right. That ramp up in working capital, particularly in products where you have got a long qualification period for your plant and your resource, that can be a very interesting challenge for the juniors. Yeah, it's stuff still to be resolved. Well, look, guys, I think we're out of time. Thanks, Nick, Dale, Chris, for your inputs today, and we'll let everyone move on to the next session.
Thank you.